Hello traders, Cory Mitchell here with TradeThatSwing.com. In this video we're going to look at how to day trade stocks on a 1 minute chart. This is a relatively, I don't want to use the word simple trend strategy, but I think for a lot of people it's fairly logical. It captures momentum. We can have a target out there, but we're also going to use a trailing stop loss most of the time. And yeah, I think you'll find it fairly simple to employ. The one thing that people do find tougher is when we have a choppier day, which we're going to show an example of, being able to have the discipline to stay out and just say, you know what, hey, this is not really good movement to be trading this in. So this article has a lot of stuff, what stocks to trade, time of day, we're going to discuss that, what kind of stocks to trade. In terms of that, for stock trading, I recommend the best day trading stocks list. This gets updated each week. We have really high percentage movement stocks that move a lot between the open and close. This is between the open and close movement, not average true range, which measures gaps. As day traders, we generally can't trade the actual gap distance. So I look at what's moving between the open and close. So these are dollar amounts and these are percentages. So these tend to be lower price stocks. These tend to be higher price stocks with big daily dollar movements. This strategy is covered more in depth in the stock day trading course. They're 20% off right now. Use Easter 2025 as the discount code. So let's get to it. High momentum. We have a drop. Then we have a move up. This doesn't matter so much. What we're looking for is just the high momentum to the upside. So we want to see the start of a trend. What's a trend? It's either a higher swing high and a higher swing low. So we have a higher swing high compared to the open. We have a pullback. So we're waiting for the pullback. Once that pullback begins, this is a very active strategy in the sense that basically once that pullback begins, as soon as we make a new move above a candle high during that pullback, we're going to enter. So we have green candles, we have a red candle. Sometimes it won't necessarily be red because you could have just a little pause and you might have like a couple little green doji candles or something. So the color doesn't necessarily have to change, but it often will if you're using candlesticks. But either way, so we have a move from the high, we move off the high. So once we move above this candle, we're going to enter along. I would say as a default, put out a 2-to-1 reward to risk and then just use a aggressive trailing stop loss after that. So we're using a combination of trailing stop loss and target. If the target gets hit, great. If the trailing stop loss gets hit before the target, that's also fine. So here, entry right above that red candle, we can be ready to go. We know what the strategy is, so we know where our stop loss is going to be. We know where our entry is going to be. We can even draw this in before it happens, right? And then if we were to drop another candle, we would just, move this little, thing down to wherever we're going to draw. These indicators on the bottom, I just have volume here. I don't really look at it much. And this other one, IR percent, just shows how big the candle is. I find it useful for just, kind of calculating position sizes on the fly. If I know approximately how big a candle is, then it makes it easier to, figure out position size for that stop loss. So we know we're going to go long above this. If the price moves above this candle, we know our stop loss is going to be at the bottom of it. So then we can even extrapolate out where our target's going to be, draw that, just throw that box on there. In this case, we get entered. Sorry, that's not quite the right spot. So we're going to go long above that candle. Stop loss is going to go below. 2-to-1 reward to risk. Right there, so that would have gotten us out on that move up. If we hadn't have gotten out, then we would have got trailed out right there. So an aggressive trailing stop loss moves up with each candle low if we're going long. So it would have started there, then it would have moved to just below this green candle, then it would have moved to below this one. we're just going to delete this for a second while I show the aggressive trailing stop loss. Then as this one closed, we would have moved the stop loss to just below it, then to just below this one, then to just below this one, then to just below this one, and then at that point it would have been stopped out on the next candle. But it hit our target in the meantime. So the question is, do we want to take this next one? Well, that one hit our target pretty nice. So we could take this next one. This stop loss, look, you know, it's kind of a chunky candle. But probably not too much, maybe a little bit bigger than our last one. So we could take it. I also like to dissect price a little bit. So we had this move up. And then our next move up was from this low. And notice there's a little pause in here. And we have a little consolidation. Again, let me delete this. So, yeah, we're deciding, do we want to enter on this red candle? Well, we had this move up, and then we had this move up. This move up is smaller than this one, as you can see. So that's how big that one was. And then from the low of this pullback, you can see it doesn't reach the size of that last one. So that shows a little bit of slowing momentum on this last up wave. And then this up wave, which is really noticeable, is even smaller than this one. Right, so this one measured from the low of that move up to that high. We go from the low of this pullback, and you can see it didn't even get close to that. So it's, you could do those kind of measurements, or you could use the measurement tool and say, hey, this one was $3.63. This one was $2.90. This one was $1.87. So we're losing momentum. So we could understand that and say, okay, the waves are getting smaller. So I could go long here, but my target, I can't expect, you know, a huge move, at least based on what I've been seeing. So if we did take this, you know, we'd have to have a pretty conservative profit target. You can see this one, this high moves quite a bit above this high. This one just barely above that one. So if we were going to go long, we'd have to have a target just barely above this, which doesn't give us a great risk reward, right? We're taking on all this risk to have a target just up here. And the aggressive trailing stop loss would have got us out pretty much flat, as you can see here. So it would have been here, and then it would have moved up to the low of that candle, and then it got trailed out. Same situation on this one. Do we want to go long there? Well, it's a nice little candle. We could, but the price is, you know, just kind of barely moving up at this point, right? Had this little push, pull back, next push up, didn't make a whole lot of progress. Now we're pulling back. Trailing stop loss would have done well, or even a target would have hit our 2-to-1. But it's not the high momentum situation that this one was. So this is what I would say is like the bread and butter type trade. Easy money. Once that everything starts to slow down a little bit, then that's when we get into a little bit more trouble. That's how we drew it initially. Yeah, what about this one? So now we have a high momentum situation again. This is getting bigger, right? So we had these couple little up moves, and then we have an acceleration of the uptrend. This box wouldn't be drawn yet, just ignore it for now, but it's going to be important later. Pull back, so we could potentially go long there. Trailing stop loss kicks in. Our target's way up here. We would have got trailed out right there. So just a little bit of a loss, but not a full loss. Remember, our original stop loss was down here. So whatever our original risk was, we only ended up losing a fraction of it. The price we always want to be looking at the price action. What's it looking like? Well, we did get up to that prior swing high, so that at least shows some momentum for the bulls. We are still in this overall uptrend. We have nothing to indicate we should be going short yet. So on this next pullback, do we want to go long? I probably would, because we had the pullback, we got back up to the prior high, we got back to this prior low, but now we're starting to bounce again. So this is what I call a double pump. It's basically our second chance at a TC entry if the first one didn't go anywhere. But there are some requirements. The price does need to get to the prior swing high if we're going long. I don't want it dropping way below this last little low. So as long as, you know, the prior high was reached and we're not dropping way below this swing low, a tiny little bit's okay. But I want to be entering when the price pushes back up. This one would get trailed out almost for a full loss, because our original stop loss would have been below that candle, then it moves below that one, then below that one. So pretty much a full loss there. These ones, yeah, as we discussed, okay, they would have worked out, especially with a trailing stop loss, and some would have hit the target, but a little bit lower momentum situations in there. So now once we have this sideways, we've been chopped up a little bit in here. We don't want to keep just taking trades hoping the trend continues. I want to see a high momentum situation again. So basically that would mean we'd either need a really sharp drop or we'd need a move up and out of this area, and then we can trade the next pullback. There's a high momentum situation because we have a pop up, right? And even though it's a wicky looking candle, if we get a candle after that, we have a potential trigger. So now the next candle forms and we have the same situation that we had over here. It's like we had this pop up, and if we can go long if the price goes above that candle high, stop loss goes below that candle low. And we'll trailing stop loss as well. No trailing stop loss triggered. It hits our 2 to 1 would be right around there. So it hits our 2 to 1 reward to risk before the trail out occurs. If we had been going for a much bigger target, then we would have got trailed out right there. But that hits our 2 to 1. You can see the price just kind of barely made progress before it started to fall off. So do we want to go long on this pullback? Well, there's one other thing to consider is, yeah, we're kind of maybe struggling a bit up here, but we also, unless we move, if we hold above this kind of old range, that's something else I'll look for. So let's see. Yeah, price holds that old box. So it's like, okay, well, if we go up from here, I'd consider a long, but again, a conservative target, because this high, we're not making a lot of progress anymore. So we have a bit of momentum, but not a lot. So we can go long, target near that prior high, maybe just slightly above it. What was our reward to risk on that? 1.7, so that's still pretty good. It's not quite 2, but we're also factoring in that we don't have a ton of momentum here. We could have gone for a bit more. It probably would have eventually hit 2. Yeah, it would have hit 2. But I'd rather be a little bit more conservative in this situation just because there's not a ton of momentum. Do we want to go long on this one? Well, we're still outside that box, but we're just barely making progress. So if, the price got back up here, that's not really a great risk reward, right? So now it's becoming, we can see by this point, the price has changed quite a bit from what was going on earlier in the day. There's lots of momentum, and now it's getting a little bit choppier. So I would tend to avoid this trade now because we don't really have much momentum at all. These are becoming much smaller price waves. Follow through is lacking a little bit. Follow through is how far the price tends to move after a pullback. So we have a move up, pullback, lots of follow through. Pullback, some follow through, pullback, lots of follow through. This one followed through nicely. This one followed through a little bit. So we're seeing, you know, a bit of a lack of follow through, even though this was a winning trade. Big drop. So now what we're looking at is how we're waiting for a pullback to potentially go short, because now momentum here, big drop to the downside. We took out these swing lows, transition, right? And we had already discussed that these were just barely making higher highs. So beautiful trade there. Pullback starts. We're waiting for a candle low to get taken out in this place. In this case, 2-to-1 reward to risk. Maybe it gets hit. If not, we get trailed out right there for probably about a 1-to-1 reward to risk. Then we hit the 10:30 mark. This is best traded in the morning. After 10:30, things tend to slow down, or after about an hour of the market being open. If we just kind of scroll through the day a bit, you can see we do have a couple momentum situations, but you know, it's going to have a tendency just to have less follow through. If you were using an aggressive trailing stop loss or something, you'd probably get, you know, you would have got triggered out right there before the little move, because things just get a little bit choppy. There's not as much volume, not as much momentum generally as the day progresses. So stick to early morning with this. If you're going to trade it later in the day, you're going to want to have a little bit more leeway with entries. Let's go to a different day, where this day you can see ended up being more choppy. So how do we protect ourselves on days like this? Well, using all the rules we talked about before. So we're not going to know what's going to happen on the first trade. All we can see is there any momentum? Yeah, we have momentum to the upside. There's nothing that really indicates downside momentum. We moved up. We have a pullback, had a higher swing low. If this would have gone all the way back to the bottom, I wouldn't trade it. But the fact that we had a move up, and at the moment when we get a trade signal, we are still at a higher swing low. So we have a pullback. We're waiting for a candle high to get taken out. 2-to-1 or so. Yeah, 2-to-1 would be up there. And aggressive trailing stop loss is triggered out right there. On this next pullback, do we want to go long? Do we want to go short? Like basically where the chart is right now? Neither, because we haven't made a higher swing high. This move up couldn't get to that prior swing high. We haven't made, you know, a strong move to the downside, even though we have a couple red candles. We have no momentum to the downside. We haven't made a lower swing low, lower swing high. So there's no downtrend. The uptrend is very much in question. We had this little pop, but then we couldn't even get to that high. So I would just leave it alone. We see no follow through to the upside here. Then we get a little bit of a drop. But we're still stuck. Notice this was the initial move of the day. That first move. We're still stuck. This is very different than what happened on the prior day, where basically we move into an expanding range right away. So we had a day high, we put in the day low, boom, to a new high. This is going to be the easiest environment to trade in when you're just making new highs for an uptrend or new lows for a downtrend. You can see this trade occurs within the confines of the day earlier, but you had a very high momentum situation. Once you move back into kind of the range of the day, it's going to get a little bit more complex. So these types of situations are going to be the easiest, where it's just, you know, you made a high, you made a new high, you're pulling back. You made a new high, you're pulling back. You made a new high, you're pulling back. Right? New high, pulling back. Ooh, it gets a little bit more complicated there, but we have a double pump. Then we make a new high, pull back. New high, pull back. New high, pull back. Oh, new low, pull back. new swing low there. Not obviously not a new day low, but we have a new swing low because it took out that. So big momentum change. Here, nothing is getting taken out. We set the day low, we set the day high, and we're just moving within it. There is no strong trend. This is when you sit out because, yeah, it's stuck. It's stuck below these old highs, and we don't have the momentum situation. Even here, if you thought, oh, there's a nice momentum burst, you have highs stacked up just above it. So if you went long there, you don't have a whole lot of room until those, let's call them resistance levels for now, until proven otherwise, get taken out. So this is stuck, and as you can see, there's no follow through. It basically kind of moves up to a prior high and then tumbles back to a prior low, then moves up to a prior high. So this would not be part of the strategy. Maybe you come up with something else for trading days like this, but it would not be a TC, which is a trend continuation. And I would stress that it's a high momentum trend strategy. So you can see just how different it would be on these days. Yeah, this day you'd have one losing trade with this, a partial loss, half a loss. That's okay, because on days like this, you're going to do pretty well. And I think that's where some people falter, is with this strategy. They're going to try to force it on days like this. They're going to lose a bunch of money. And yeah, maybe they make some back on the trending days, but then they give it all back on the choppy days. So it's going to take some discipline. Notice the difference between these two. We talked about lots of kind of different rules, things to notice to help you avoid too much damage on days like this where we don't trend, and to be able to capitalize on days where we do trend. So I hope that helps you out. You can definitely check out the article. I will link it below, as it has some additional information on how to position size, overall risk management, things like that. You can also check out the best swing trading stocks list, which is useful for stocks. This does get updated each week. These dollar movers don't change as much. These percentage movers tend to fluctuate a little bit more. And yeah, hopefully that helps you out. And hit the like button if you found this helpful. Subscribe if you want more like this. Leave your comments depending on, if you try this out and you like it, let us know. And other than that, happy trading.